Hey guys, good morning. Welcome to Market Uncharted. Today we are going to discuss a new topic or a trending topic in the financial markets, which is the SPAC. SPAC being the special purpose acquisition company, a tool being used lately to make sure private companies go public in a more easy and simple way. But let's go and try to understand what is a SPAC. A special purpose acquisition company is a company with no commercial operation that is formed strictly to raise capital through an initial public offering for the purpose of acquiring an existing company. Also known as blank check companies, SPACs have been around for decades. In recent years, they've become more popular, attracting big name underwriters and investors and raising a record amount of IPO money in 2019. In 2020, and as of beginning of August, more than 50 SPACs have been formed in the US, which have raised something like 21.5 billion. You can see here in the graph provided by Yahoo Finance the spike in SPACs in 2020, and the trend continues in 2021. Fab alone, you can see here we already almost half of the total SPACs done in 2020. So we can see here a really trend is becoming in the financial world. But how a SPAC works? SPACs are generally formed by investors or sponsors with the expertise in a particular industry or business sector, with the intention of pursuing deals in that area. In creating a SPAC, the founders sometimes have at least one acquisition target in mind, but they don't identify that targets to avoid extensive disclosures during the IPO process. This is why they are called blank check companies. IPO investors have no idea what company they ultimately be investing in. SPACs seek underwriters and institutional investors before offering shares to the public. The money SPACs raise in an IPO is placed in an interest-bearing trust account. These funds cannot be disbursed except to complete an acquisition or to return the money to investors if the SPAC is liquidated. A SPAC generally has 2 years to complete a deal or face liquidation. In some cases, some of the interest earned from the trust can be used as the SPAC's working capital. After an acquisition, a SPAC is usually listed on one of the major stock exchanges. Selling to a SPAC can be an attractive option for the owners of a smaller company, which are often private equity funds. First, selling to a SPAC can add up to 20% to the sale price compared to a typical private equity deal. Being acquired by a SPAC can also offer business owners what is essentially a faster IPO process under the guidance of an experienced partner, with less worry about the swings in the broader market sentiment. And important reminder as well, SPACs have 2 years to complete an acquisition or they return the funds at the minimum $10 level to the investors. So you can see that the investment on these SPACs are rising as we speak. 2020 was already amazing. 2021 we foreseen at least double the number of SPACs of 2020. And now just a few examples of high-profile SPAC deals. This is so far the most important one, and it involves Richard Branson's Virgin Galactic with the venture capitals called Shamat Palihapitiya. SPAC Social Capital and Ospia Holdings bought a 49% stake in Virgin Galactic for 800 million before listing the company in 2019. And Shamat is the king of SPACs. He done several by now, but this is the most high profile one. Then we have another important investor in Wall Street, which is Bill Ackman, which also founded a SPAC, Pershing Square, which this can also be a really important SPAC in the future. So far, we don't have any information about the possibilities of this investment, which private company this SPAC will be having in the future, but just for you to understand that a lot of possibilities out there, and when a person such as Shamat Palihapitiya or Bill Ackman have their own SPAC, we should be taking a closer look. And finally, and really important, this is not yet confirmed, but this is a high profile SPAC deal for 2021, which is the potential Churchill Capital merger with Lucid Motors. Lucid Motors being a really amazing electric car brand can be together with Churchill Capital. And this is something that is potentially, but already many information like coming out in Reuters or Bloomberg pointing out this possibility is really real. And this has become a $10 SPAC and is now reaching the $60 SPAC without any agreement yet. So the hype is real, the speculation is really high about this SPAC deal. Let's see if it, in the end, it actually delivers. But so far in 2021, this is the most anticipated SPAC deal done until now. And again, and just another information in Bloomberg saying that it's a 90% chance of this merger to happen. This first news was breaking out by Reuters, which gave here a 12 billion valuation on this SPAC deal, but around $60 we have a valuation of 66 million. So again, not financial advice, but take attention. Pay attention to what's happening to the news. The valuation that's coming out in Reuters in Bloomberg does not match what's been having in the market. So it's important for us to have all the information on our side. But so far, it seems really well directed, this potential SPAC between Churchill Capital and Lucid Motors. And you have something out there as well, upcoming possible mergers. Shamat Palyapati, a social capital SPAC with SoFi. Also, Churchill Capital will lose it as we've seen. Climate Real Impact Solutions with EV Go, which is a charging station in the electric vehicle space, which can also become important as a SPAC and then a trading share. Don't forget, knowledge is not power, knowledge is potential power, execution is everything. Although the SPAC asset is becoming really trending in Wall Street, always do your due diligence, investigate further to see if it makes sense. This is being potential in a lot of speculation with a lot of rumors, and until the deal is done, we all must be really careful. And yes, I'm talking about CCIV and Lucid Motors because I see the share rising price every day 10-12% without anything being confirmed. So take a look, and also don't forget about Lucid Motors, which is an amazing company, but all only start selling vehicles in the first quarter or the second quarter of 2021. So it's a company without any revenue yet. But thank you so much for watching this video. I hope you like it. Please subscribe our channel for more content. And don't forget, just like the markets, we will not rest.